Now, using the Sahm rule, the Dow could trade down to 39,000 once again. Now, the Dow is trading at 41,000 right now, and people are asking, is this going to be the pullback that everyone is waiting for? Well, the bull Tom Lee sees a 5 to 7% pullback. So is this a coincidence? Well, let's go into details right now. Now, guys, very important to understand this, okay? Tom Lee has been bullish the last 2 years, and he's so good with the bull, all right? He's well known for being the lead strategist at Fundstrat Global Advisors and has predicted correctly the market climb and has always been bull. So now on Tuesday on CNBC, he warns that a little pullback is coming. Now, the thing is that he pegged the S&P at 5651, and he says that it needs to be broken for upside. Okay, he says that now 5570 is going to be an interesting resistance. He feels that right there should be a pullback. Now, he says that it should be about 5 to 7% and it will be volatile, and I totally agree with that. Now, we all saw on last Tuesday, the US manufacturing activity has declined. And that also shows that, right, okay, the US economy could really be facing a little bit of recession. So that is where I zoom into this, the Sahm Rule recession indicator created by Claudia Sahm. Okay. So what happened is this. She is actually formerly the Federal Reserve and Council of Economic Advisors, so she has her background. And she came on this Sahm Rule thing since 1949 to 2024, and it seems to be working. Now, everyone take a look here yourself. Seemingly that whenever the Sahm Rule valuation goes up above 0.5, okay, get put up there, you can see that within 4 months to 8 months, there will be a recession. Okay, this is something very, very scary. In fact, the fastest was just 2 months. Okay, now if you look at the unemployment data on average itself, it's about 4.5 to 5%. So where are we right now? It's about 4.3%. So to me, it's all in line at the moment right now. So the thing is this, as long as it stays above the 0.5% mark, we can see what happened over the last few years. So back in 2021, you can see that I covered this story before. I'm going to do it again for you guys. Is that when the Sahm Rule goes above the 0.5%, okay, that was where the Dow basically hits a peak. Now, that wasn't the peak of the market. In fact, the peak of the market was done back in this 2099. Oh, sorry, year 1999. So that was the first highest point, but the breaking point was here when the Sahm Rule goes above the 0.5% mark. Okay, move forward. In 2008, it happened again. The market hit a peak, but that was not that is the highest point back then. But the real selling came when the Sahm Rule goes above the 0.5% mark. You got my point now? Okay. So the thing is this right now, it happened again back in the 2020. That was during the COVID period. And of course, again, the Dow was at a new high back then. And before that, there was a new high before that. And then what happened? When the Sahm Rule came in, bang, the market came down. So it seems to be having consistency right here, that the market must create an all-time high, which is what happened back then. All-time high, right? All-time high. And also here, all-time high. So where we are right now, yes, indeed, we are at an all-time high level. And I believe that this is where the market is going to have a peak very soon, because now the Sahm trade is calling for a 0.53 now at the moment. So based on what Tom Lee have just mentioned, a 5% pull will be at least 39,000. A 7% pullback will be 38,000. So what do you think, guys? Coincidence? Interesting. So if you look into detail, right into those years that things happen, well, let's take a look here. Okay, so this is what happened in June 2001. The Dow was trading at 11,000. Okay, around 11,000, right here. And then you can go all the way down. Okay, but this is a weekly chart. Take note, yeah, it took about probably 4 months for the market to come back down here, and that was about 8,400 points, and that was down by 23%. Okay, cool. Now you look at the next chart, which is the following cycle when this thing happened. This was the Dow trading at 12,600. It's not the highest point, remember? And then the market took about probably 4 months to 5 months for it to come down to this stage here, or probably more than that. It's like probably 10 months, okay? And the Dow came down to 8,200, so down by 34%. Okay, let's just move to the next cycle. Right, same thing as well. What happened? That was where during the COVID period, the market hit a high, and then the following week, there's some selling. The Dow was at 28,000. We went all the way down to 19,200, down 31%. So if you do the average over here, it's all right. We're talking about the market down by at least 20%. okay, at least 20% when the Sahm Rule goes above the 0.5% mark. So moving with this information, you look back right now, okay, where we are right now, okay, we are now here where the thing is at 0.5%, it's now 0.53%, and the Dow is 41,000, right? So a 5% drop will be 38,950 to be precise. A 7% drop will be 38,130. So you look at the chart right now, the moving average at the moment for the MA50, the average is about 39,000. So that means that there's a very good potential for the Dow to pull back to the moving average. And that will be a good time to buy. I repeat, yes, buy. Why? In anticipation of the US presidential election. So I suspect that the month of September will be a down month. Then come to October, that's where the market should be able to recover. And that's where the market should be going back up again. So watch this space, guys. I think that this will likely be happening. And of course, with our indicator, the crazy indicator, we just saw it on our screen. We noticed something interesting now. And we'll take a look. The indicator has shown us a peak recently, right? Okay. Now the boys are actually selling in the moment, although the retails are still buying. So I suspect that today the main support will be at 40,956 right now. The moving average MA30 is 40,774. I suspect that today the Dow will come down to here for the first breather. Then we should hold that for a while. If the market do break below 40,774, gosh, guys, we may even see all the way down to 40,500 series. But if you look carefully down here, 39,453 is the MA200, which is the level that I mentioned again earlier, around 39,000. That should be the level that the market should stabilize and then rebound. Let me know in the comment box, guys, if you think that you like this video, and please share your friend about this. This is Cal signing off. Take care. Have a great day. Bye-bye.